This video is brought to you by the award-winning prop firm, Fidelcrest. All right, folks, here we are on Trading Up. We've got Matt Mortimer in the house. We've just done a fantastic podcast where he breaks down his trading journey to the point where he is now running a educational company, trading fund, and he's only 21, is it? 21 years old?
Yeah, that's correct, yeah.
So today, guys, you're going to find out what it takes to get a 1,000 pip trade on EJ, and he's going to talk about the data collection he spoke about in the podcast, which is key to his trading. So welcome back to the show, Matt.
Thanks for that, Cam.
Let's share your screen and get on with it. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
So if we kick things off on Euro Yen before we go on to the data collection on the spreadsheet. So first of all, as you can see on Euro Yen, naturally, if on the 12-hour time frame right now, we are very bearish, and you can just see by the downtrend. Now, this was a trade we actually took back in May, so it is quite some time ago. However, I do class this as trade of the year, which is why we're covering this. As you can see, high, low, lower, high, lower, low. So price is in that downtrend. Now, price, as you can see from a momentum standpoint, we've seen an impulse to the downside, and we are quite corrective coming back up, and we're coming into this supply region up here. However, the thing that caught my attention is price hadn't actually tapped that. Now, something I'll encourage you guys to do is look for buy to sell / sell to buy setups. Now, what that actually means is instead of waiting for price to get up there, see if you can capitalize on a move to ride price into that supply zone. So what I did was actually identified that even though the 12-hour is bearish, well, the 4-hour is still bullish, as you can see here. We've got the low, high, higher low, higher high. Even though we've only just barely broken the high, we still have done that, which is why that is classed as a higher high. Now, for my actual entry, what I looked at is a demand zone down here. Now, the reason why I saw this as a demand zone is because we saw sideways movement, change of character, which means buying kicked in between point A and point B. So I then look at this candle right here, the previous candle before the change of character. However, something I'm a big fan of, and like I said before, I encourage you guys to do, is looking at handles. Now, if we look at this handle, it sits within the demand zone, and this isn't a coincidence. So what I do is refine that zone down to the 135 handle, because this is when big orders of high volume will take place, right? And if we just drag that down to the 135, there we go. This is the zone I was looking at. And like I said before, because we had the sideways movement and then the impulse to change the state of price, because this was the previous state. Now, the idea originally was to ride price up into that zone. And that is why this supply zone up here was TP1, right? However, to actually validate the trade, what we need to do is watch momentum on approach. Now, momentum for me is a big validator of a trade. If you do look over a long period of time with data, momentum is one of the things that can impact your data quite a lot. So the limit is not set at the moment. However, as we start to retrace down quite nicely like so, that's when I have the confidence to set, because that tells me that price is reacting quite nice to coming into contact with the liquidity over here. And as you can see, this was a very nice entry. It triggered, came into the demand zone, and we start to pull away quite nice. We come back in, and there's actually a re-entry here based on a 15-minute POI. Price tapped TP1, which is, of course, that 12-hour zone which we were looking for. However, the 12-hour supply ends up getting broken through, and then we start proceeding to the upside. Now, of course, we need to get into a habit of taking partials along the way, right? You can't just let price run for 1,000 pips and not take any partials. Start taking partials and watch your trading account grow, right? So TP1 was here, we got out quite nicely, and then we started to scale out along the position. And of course, with the stop loss, what we also started doing was move that up as well. So it was the best of both worlds. And as you can see, eventually this starts to continue moving to the upside. And we just peaked at around 925 pips. So overall, very, very, very nice. And yeah, that ran very, very nice. And this was given out actually in our day in the life on YouTube as well. So this was not just given out in the trading level section, but also on YouTube. And that peaked for 925. We did have a tiny remainder, maybe 5% volume, ended up coming back to the trailing stop, but that's completely fine. As long as you're taking, the majority of the position out as you come into TP1 and TP2, that's what really matters. But overall, really, really nice position. Simple, H4 trend, nice demand zone. And yeah, no drawdown on this at all. Now, a couple of you may think, Matt, how did you get in the position? Because, well, spread, right? However, even though you read this level here, which is the 135 handle, that's not the level I'm actually entering on my MetaTrader. I need to take spread into account. So I'm actually putting it slightly above. So even though this looks like an amazing entry here, we actually put the number in around there. So it's taking into account spread, which you all need to do. So it's around 2 to 3 pips, depending on your broker. But no, overall, fantastic trade. Now, actually moving on to the data collection
Actually, before you do, I just want to ask a couple of questions. So one is, handle for you is just like a round number. Yeah.
Yeah. So when I say handle, it could be the 135, 137. Yeah. And that's just because these corporate, these big funds, for example, will interact at these levels.
And the second question is, so you've got no coloured candles on the charts, just one colour, no signifying. What was the decision factor around deciding I want to move to just a one colour candle?
So like what we spoke about in the podcast, it's the small little tricks, just like with the watch list, for example, the small little tricks that just help. And now I don't really care if it's a red, green, orange, blue candle, whatever. It's the characteristic of the candle that I'm actually more interested in.
Interesting. Brilliant. Well, let's get on to the data collection stuff. And guys, I'm really looking forward to seeing this. So over to you, Matt.
Cheers. So if we move on to the Excel spreadsheet now, again, this is what we touched on again in the podcast. Very, very simple, right? So 3 basic things. Again, this isn't the final. This can literally just be draft 1, right? And draft 1 could be with trend, valid supply and demand entry, and momentum favorable, as we just touched on, right? And what you want to do is you want to go back 12 months. You can just use replay mode, and you can start tracking trades that all 3 of these meet. So it has to meet the criteria. You put the date, you put the time, and you put the return. Whether it's a loss, whether it's a win, you journal it. Now, it's very, very important you journal your losses in terms of the data collection, because if you want to, only do the winners, you'll come back at the end of the year and you'll have an amazing return. Is that realistic? Is that going to help you? No. So you need to put your losses in, because if it's a bad model and if all 3 of these are bad, well, then why do you want to take it forward into, draft 2, 3, 4? It doesn't make sense. So if it is a bad model, you want to dismiss it as soon as possible. So show your losses when they do come up. And by the end of the 12 months, we'll have loads of trades, loads of positions. I'll be able to see the win rate. Am I happy with the win rate? If not, can I add something in 4 that could potentially change the numbers and alter the numbers? Or do I need to think about potentially getting rid of one of these? And again, return. Am I happy with the return? Or perhaps are we not even getting enough trades in the first place? If it's only giving me 1 trade every month, do I really want to progress that model forward into draft 2, 3, 4? Again, that's the conversation to be had. But no, you wouldn't know these small details without actually doing the data collection. And once you've done this over, 10, 15 pairs, you're going to have a really, really nice spreadsheet. And that's when your trading will go from here to here.
And in terms of the stop loss and take profit for these, this kind of model, I mean, how do you determine, where my stop loss is and where my take profit is, so that it's like a regimented kind of thing?
I look at the 4-hour chart. Again, like I said before, I class the 4-hour highs and lows as protected areas. I'm confident putting my stop loss above a 4-hour high and 4-hour low. If it does get taken, that means there's a change in trend and I'm happy to come out of the position.
Right. Okay. And so in terms of take profits as well, that's the same thing. You're targeting the highs and lows?
So what I like to do is do TP1, 2, 3, and then move my stop loss. I don't like to have a 100% volume closed level. I like to, once price gets to a low of the trend, I'll then take TP1, come out, and then let it run, and then move my stop loss down with it.
And on a 12-month test on one pair, what would be a trade frequency that you would find or consider too low?
Too low? Definitely if it was maybe only three trades a month, I'd dismiss that.
Okay, brilliant. Well, look, absolutely fantastic stuff. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. I think the guys are going to really be able to sink their teeth into not just the charting, but also the back testing, and hopefully some of them will take that up and even possibly go and check you out and see if they can learn a bit more. So before you wrap up, what's the best way for the traders to get hold of you?
Yeah, drop me a message on Instagram. Come join the free Discord. We can talk about trading, and yeah, just look at all the charts and analysis that are in there.
Brilliant. Well, look, guys, we did do a podcast before this, so link below the video. You can also get his business partners, colleagues, Charlie and Alex in there as well. So go and check those out whilst you're there. Do you remember, while you're clicking around there, click on subscribe, hit like, click on that notifications bell, click all, and we'll see you in the next video.